Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. The long-awaited breakout in gold and silver may finally be upon us. The gold market has been knocking on the door of the $1,800 level for the past 3 weeks. On Thursday, prices pushed strongly above that resistance line to close at $1,822 an ounce. As of this Friday recording, spot gold trades at $1,841, and it's up 3.7% for the week. Turning to silver, the white metal is surging 5.5% higher this week to come in at $27.46 per ounce. Any additional strength to finish out Friday's trading would cause the market to register its best weekly close of the year. Although silver prices traded up to the $30 level briefly in early February, a sharp sell-off followed that caused the market to put in a significantly lower close for that week. Some long-term traders prefer to follow weekly rather than daily technical and momentum indicators. A decisive move above $30 an ounce confirmed by a weekly close would be hugely bullish. It would represent a breakout from the consolidation pattern that has formed since last summer. It would also establish a fresh new multi-year high for the precious metal. When silver is ready to run, its rallies can be fast and furious, so a rapid move to new all-time highs above $50 can't be ruled out. But the market will ultimately move at its own pace, so having a long-term horizon is the best way for investors to avoid missing out on the next big move. Precious metals markets will lift over time with the rising tide of inflation. Recent trends show inflation running hotter than it has in years. In recent days, officials at the Federal Reserve and Treasury Department have gone out of their way to downplay the inflation problem. They insist inflation pressures showing up in the economy right now are, quote, transitory. But the trillions of dollars in new spending, borrowing, and currency printing coming down the pike from Washington will have long-term consequences. The Treasury Department recently reported it expects to borrow $463 billion in the current quarter, far more than previously expected. The new spate of Biden borrowing will spike the federal budget deficit to $2.3 trillion, all in a single year. Treasury Secretary Janet Yellen says not to worry, though, because the Fed has everything under control.
U.S. Treasury Secretary Janet Yellen tamps down concerns that President Joe Biden's plans for infrastructure, jobs, and families will further stoke inflation.
Well, now the Treasury Secretary says she does not anticipate that inflation will be a problem in the U.S. economy. Treasury Secretary Yellen also saying aside from some transitory, that's the Fed's word, increase in inflation in coming months, I don't think there's going to be an inflationary problem. The Fed has tools to address them.
The Federal Reserve has the tools to address inflation should it arise. We will monitor that very carefully. We're proposing that the spending be paid for. And I don't believe that inflation will be an issue, but if it becomes an issue, we have tools to address it.
The Fed may have the tools to keep inflation in check. It could cease making asset purchases, jack up interest rates, and curtail money supply growth, at least in theory. The real question is whether central bankers would actually have the will to do what's necessary to bring down rising prices. The current stated objective is the opposite, to raise inflation rates above 2% for an extended period. The risk is that inflation overshooting their target puts policymakers in a precarious position. Would they take away the punch bowl? Would they be willing to inflict financial pain upon Wall Street, the big banks, and the U.S. government itself? Without the Fed's low interest rate stimulus, markets could collapse. Government borrowing costs could become unmanageable, sparking a sovereign debt crisis. Treasury Secretary Yellen and Fed Chairman Jerome Powell know full well that the entire house of cards could collapse without the benefit of negative real interest rates. They may not say so publicly, but officials in Washington are effectively banking on inflation to bail themselves out in perpetuity. If wage earners, savers, and retirees who earn and hold dollars suffer in the process, then so be it. In this environment where the entire financial system is artificially propped up, bubbles never burst. Instead, they are constantly reinflated on a rotating basis. It won't always be the stock market that is the top performer. At some point, inflation fears may drive mainstream investors to make dramatic moves to try to protect themselves. The biggest rotation of all could be from dollar-denominated financial assets into tangible assets, including physical precious metals. In recent days, we have seen signs of such a rotation. Some of the hot stock market sectors from last year, including biotechnology, internet, and innovation plays, have sold off. Meanwhile, inflation plays, including energy and metals, are showing impressive relative strength. While gold and silver have lagged most of the year, they have tremendous upside potential at these levels and may just now be getting warmed up. Moving into some industry news, I'm pleased to report that Money Metals Exchange and the Sound Money Defense League have secured another sales tax exemption for our precious metals customers. On Monday, Arkansas Governor Asa Hutchinson officially ended sales taxation on gold, silver, platinum, and palladium bullion and coins in the natural state by signing Senate Bill 336. This also set an example for legislators in New Jersey, Maine, Ohio, and Tennessee, who are also considering enacting similar sales tax exemptions in their own states this year. The Arkansas sales tax exemption takes effect on October 1st, 2021. Including Arkansas, 40 U.S. states now fully or partially exempt gold and silver from sales tax. That leaves 10 states and the District of Columbia as the primary jurisdictions that still harshly penalize citizens seeking to protect their savings against the serial devaluation of the Federal Reserve note. Arkansas will now rise from dead last in the Sound Money Index to 30th place among the 50 states. I want to specifically thank our Money Metals customers and readers in Arkansas, as well as a handful of local coin dealers who called and emailed their elected leaders in the Arkansas legislature to register their support for the bill. There is no doubt that grassroots pressure played a big role in securing this week's important legislative victory. Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.